Welcome to the virtual roadshow series on Channelchek. Today we are featuring Indonesia Energy Corporation, NYSE American, ticker symbol INDO. Research coverage of Indonesia Energy is provided by Noble Capital Markets. Noble is a FINRA licensed SEC registered broker-dealer. All Noble research is available on Channelchek. If you would like to submit questions, please type them in the box provided on your screen. Following the formal presentation, Michael Heim, the Noble Senior Analyst covering Indonesia Energy, will ask our presenter a selection of the questions received. The source of the questions will remain anonymous. And now, Frank Ingriselli, the President of Indonesia Energy, to make the presentation. Take it away, Frank.
Great, thank you for the introduction. Good afternoon, everybody in the East Coast, but where I am in the West Coast in California, still good morning to everybody. It's a pleasure to be here to talk about Indonesia Energy Corp. You've been sent a copy of the presentation, but I'm not really going to go and flip pages. You can take your time to look through that, either that you were sent here or go to our website, www.indo-energy.com, and you can look at our website and look at the slides. I'm just going to give you a broader discussion presentation on the company. Indonesia Energy, as you know now, is a public company on the New York Stock Exchange. We went public last December 19th and had the great pleasure to ring the opening bell on February 14th, Valentine's Day, probably one of the last bells rung before the global pandemic. But we were, very significantly, the first Indonesian company to ever do an IPO on the New York Stock Exchange. So it was a historic moment. We had everybody from the Minister of Energy to Secretary General of the country, the two ambassadors to the US, all present there. That's how important, even though we're a small micro cap company, the importance of this venture to the government, and of course to us and our shareholders, is paramount. So company is about 5 years old, was a private enterprise, was founded by two individuals, and they're on a management team as the chairman and the chief investment officer. And they put in about $30 million of their own money to develop assets in Indonesia. So all our assets are in Indonesia. One of them is producing, and one of them is in a appraisal development type stage. And we'll talk about those, oil and natural gas. But Indonesia, people don't know much about Indonesia. It's not just Bali where people go on vacation, and some people don't even know Bali is part of Indonesia, but Indonesia is the fourth largest country in the world. It is the #1 economy in Southeast Asia. 16th largest economy in the world. It is a member of OPEC. It is a member of the G20. It has had great stability over the last several decades, but in particular in the oil and gas industry, which has been operating in Indonesia for well over 100 years, but really the last 50 years has been the heart of the energy industry. A little on sort of global economics for the country. For the last 11 years, it has been growing at over 5% GDP growth. Demand for oil has gone up over the last several years by well over 5%. Demand for natural gas, well over 5%. So, notwithstanding the decline in production in the country, the GDP, the growth in the industry in the country, has created an immense amount of demand for oil and gas. And the country, as their production has declined, they're now an importer of oil and gas. So there is a slide in the presentation that has a picture of probably the logo of every company in the world that is presently operating in Indonesia, whether it be Chevron or Exxon or Shell or BP or some of the national oil companies from China, etc. They're all there. A lot of them have been there, like my prior company, Chevron Texaco, for over 50 years. And I'm just going to give one comment about that. I had a rich history. I've been 41 years in this industry. I've had a rich history. I've been blessed to be in this oil and gas industry, which seen ups and downs in energy prices. But when I was at Texaco in my 23 years there, at one point I was president of Texaco International Operations. When I exited Texaco in 2001, when Chevron took over, the #1 producing asset in the world for Texaco was in Indonesia, #1. And Chevron, which took over Texaco, the #2 biggest producing asset in the world for Chevron was in Indonesia. Together, we were actually partners and producing over 1 million barrels a day of oil. That's an incredible amount of production. If you go to Chevron's website, you'll see that they've produced since they've been there, over 12 billion barrels of oil out of Indonesia. Over $1 trillion in cash flow. That's how important it was. That's why when this opportunity to join Indonesia Energy as the president, as I'm getting closer towards, I'll put it the sunset of my career, still have a lot of years left. Where else could I have wanted or dreamed to be than to go and help a company that is going public on a New York Stock Exchange? I joined a little over a year ago, and work with them to develop their assets, get the story out to you like we're doing today, and drive shareholder value in this company. Post my Texaco days, I started 2 public New York Stock Exchange energy companies, successfully sold them, and exited those. And so this came right along at the most perfect time. So, what is Indonesia Energy? Where are they? We have 2 assets. The first asset is located on the island of Sumatra. And Indonesia, as you may know, is made up of many, many, many islands. Sumatra is one of the large islands. It's right next to Java, which is where the capital city of Jakarta is. But it's a large island, but really known for its oil production. That's where Chevron Texaco produced most of its oil and gas. So we've got 63,000 acres there. We've got 4 wells producing. Right now they're producing about 250 barrels a day, not a lot of production. But they've been around for a while, and so they've gone through that decline. But so that 250 barrels, if you asked me the question 5 months ago, before this COVID pandemic and the major drop in energy prices, that 250 barrels basically made the company, our company, cash flow even cash flow positive the final quarter of the first quarter of 2019. So that was giving us cash flow positive even results. Because of the drop in oil prices going from $60 prior to the pandemic to now about $43 Brent, we're a little below cash flow even. However, that's 63,000 acres, and when we raised our capital in the IPO, we announced that we will drill 6 new additional wells on that block. What will that do for the company? Each of those wells, and there's a great slide in the presentation, it's called Crew Block. This block is called the Crew Block, K-R-U-H, but like J. Crew, the clothing manufacturer. We call it single well economics. And the thing I just want to point out about some of the numbers there is each well, when completed, it'll go down to a depth of about 3,500 feet. It'll cost $1.5 million to drill each well. So 6 wells is well within the $15 million we raised in our IPO. Each well will cost $1.5 million. It'll take 30 days to complete. And the expectation based on results and as we filed should be about 190 barrels of oil a day from each well. So you can see as we committed to do 6 wells, and we're going to drill those, we're going to drill 2, look at the results, drill 2 more, drill 2 more. And that'll take about a 6-month period. But as you could, we're at 250 barrels now, 190 barrels each well. After the first 2 wells, we'll more than double the production of the company, well more than double the production of the company. In fact, we'll be more than cash flow positive after the first 2 wells at today's oil price. But at the end of that campaign of 6 wells, we will have increased production in the company by 400%, quadruple production of the company. And the company will be well cash flow positive at that point. One thing that was attractive about Indonesia, why Chevron Texaco made so much money there, is low cost production. As we've announced in our presentations, in our press releases, we're about $21 a barrel in production costs. We expect that with the drilling of these 6 wells, we'll be well below $20, probably around an $18 a barrel. So that's what distinguishes us from these US shale companies that have well above $40 cost of production. Many of them shut in production, not drilling any more wells. That's why we went out in the middle of the beginning of this pandemic and global recession. We went out and said, you know what? It's business as usual at Indonesia Energy. We're going to proceed to drill the 6 wells because every single one of those 6 wells will be profitable and will provide positive cash. So when you look at that profile on that slide I talked about, single well economics, you'll see that even at a price of $49 a barrel, we're at 43 right now, Brent is what we're priced on. At $49 a barrel, we will get net cash flow, net into our pockets of $1.3 million for a well that costs $1.5 million. So it's really a no-brainer that these are very positive, cash flow positive, profitable wells to drill. So we're going to drill the hell out of that block. We'll drill those 6 wells, quadruple production in 6 months from that point, that first point, which, by the way, we expect to drill starting in September. We got delayed a little bit, but because of COVID, because of restrictions on flights in between the islands of Indonesia, but we're still targeting in September to drill that first well. So 6 months post that, we'll have a 400% quadruple production, cash flow positive company. So great asset, great cash cow, but that's going to provide immediate shareholder value. We'll be announcing it, and we're going to be very active on that. I really believe in IR, public relations, letting the shareholders know what's going on in this company. But the big kahuna, the big asset for this company is located on the island of Java. And as I mentioned before, Java is where it's the largest, most popular, it's not the largest island, but the most populated island. That's where Jakarta, the capital city, is, probably 30 million people there. We've got a block there, and that block is called the Citarum block. And that block is 1 million acres large. 1 million acres in perspective is 70 times the size of Manhattan. And that block, the edge of that block, is only 16 miles from the capital city of Jakarta. So, like in real estate, and certainly in the oil and gas industry, it's all about location, location, location. We're in the right place. It's the right time on that block. Natural gas demand is growing dramatically. And we're sitting there, this is a natural gas block, ready to develop that 1 million acre opportunity. This is what gets maybe some of the major companies to turn their heads. When they see a 1 million acre block right next to the capital, and there's a slide in the presentation that shows the infrastructure, shows pipelines, gas pipelines that are already in existence in that block. And it also shows you 4 discovery natural gas wells that were drilled by the prior company that was operating that block. So 4 gas discoveries. This is a de-risked appraisal development asset. So we will drill that first well in that asset in 2021 is our plan. But this holds, in the industry, they call these elephant fields. These are elephant opportunities. Billion barrel equivalent oil type of opportunities. And we're sitting on that. Our intention is that when we drill a couple of wells, we'll bring in a partner. We'll call the Chevrons, the Exxons, the Shells. I've met those people, I know them. We will contact them to bring them in as a partner and to help fund that enormous capital costs that will require for an enormously valuable asset to our shareholders. So here we are, a company with current production, quadrupling it in 6 months from the first well beginning in September, and being cash flow positive at the current price of, even at the current price of oil. So enormous way to grow shareholder value immediately, and then have the big upside asset, the elephant field, that will deliver long-term growth to the company. That contract is for 30 years. And by the way, pricing of natural gas in Indonesia, in the United States right now, I think is about $1.85 for an MMBTU for a unit. So about $1.85 here in the United States. What it is in Indonesia right now is $7. So just think of that. More than 3 times the cost, the price of natural gas here in the United States. 3 times that's the price in Indonesia. So a great asset for the company. What I can tell you is we've put together a great management and technical and operating team. The 2 private founders of this company went and found people that have had a lot of experience in Indonesia and Asia, know how to operate. We're an indigenous Indonesian company. Our headquarters are there. We have an office here in California, just down the block. And our CFO is the CFO that was with me for 8 years in my last public company. And so we know how to run a public company. The team in Indonesia knows how to operate efficiently and effectively a public company and an oil and gas company in Indonesia. So that's what we're going to do. We'll spend all our efforts, and we will be accessible to shareholders. People have in all the press releases my contact information. Send me a note. I will answer any question anybody has, because you own the company and it's our responsibility to deliver your value. So I'll end the presentation, my part of it, and then go and kick it off to Michael Hein, who will maybe ask some questions. So thank you. Thank you very much, everyone.
All right, terrific. Thank you, Frank. This is Mike Hyman. I'm the senior analyst for Noble, who covers Indonesia energy. I'm glad to hear you finish the report talking about your accessibility, because the first question from the audience is, what are your plans as far as quarterly earnings go, and are you planning on doing calls with your earnings?
Sure. I mean, I can answer that right now, because yeah, we will be accessible. And in fact, you will be seeing that next week, next Tuesday, July 14th, we will be holding an investor conference call. We'll talk about the earnings that we've just released, and we'll have an investor conference call next Tuesday. And then we'll continue. Every quarter we will have an investor conference call. There'll be Q&A on that and everything. So we just took a little while to kick off the first one, but now we're on track to keep doing it. So.
Right. You've already outlined a pretty aggressive drilling program in the Crew block where the oil is. You mentioned COVID-19. How is that affecting the cost for drilling? You still think you're going to be able to stay under $1.5 million per well?
Yeah, we do. We went out to bid. We've gotten the bids. I believe either we selected or are about to any day now select and award the contract for drilling. Our anticipation, we went into this thinking it would be about $1.5 million to drill a well. We'll still come out at about $1.5 million, maybe even a little cheaper, because demand is less for drilling rigs, and so then maybe we'll get a little demand. But it'll be no increase in cost, and if there's any decrease, a very little bit of a decrease in cost.
Now, I know the regulation of the oil block there is a little bit unique in that you're actually allowed to recover your costs. Without going too much in the details, can you kind of explain how that works?
Sure. So our block, the Crew block, where we're producing the oil and we'll be drilling these 6 wells, that's under essentially what is like a cost recovery type scheme contract, like a production sharing contract, cost recovery. So the way that works is we'll be drilling these 6 wells. Let's say it costs us $10 million to drill those wells. Those are costs built up by the company. We then get all the production coming from the wells and the revenues, and we're able to take 80% of the revenues from that coming in from all the wells, and deduct and recover, cost recovery, our costs. The balance of the oil, of the revenues, the 20%, gets split under a mechanism with the government. So that's the cost recovery. And you know, we're not going to recover all the costs in the first year from those wells. So what happens is that gets rolled over. So all your costs get rolled over and rolled over. and you keep recovering from 80% of the production, all your costs, and then the balance gets split. If you don't need the 80%, if it's 60%, then the balance of 40% gets split up. So it's a kind of contract that has been around for, decades and decades in the industry. Indonesia was really considered one of the founders of these type of production sharing, cost recovery type contracts that got used all around the world in the international energy industry. So they really, China and other countries, even the Soviet Union, Russia, turning into Russia, where I ran a project, use those types of contracts. Now, that's in our crude block, which is the oil block. Our block on Java Island, our Citarum block, is under a a split, sort of a gross split type scheme or type contract. It's a new type of contract that Indonesia introduced, and really it was introduced to encourage more investment, encourage better returns for companies. And so under that gross split scheme, we will, in the early years, ours is natural gas. It's a complicated type contract, but people in the industry know how it works because it's been working already. We will get about 60% of all the revenues in the first several years, and then it'll go down to about 53%. And then we just take our own costs from that. So it's not a cost recovery type of scheme. It's this gross split type scheme, and provides a benefit for us in natural gas and an early benefit in terms of the revenue stream. So, tried and true type contracts.
Frank, we got a question about the ownership. I know you already mentioned the two founders and their ownership, but we just kind of run through all their ownership percentage and what names they're using in their ownership structure.
Sure. I mean, the two individuals who, through themselves or through wholly owned companies, they are Dr. Wiron Yusuf and James Huang. Together, one of them, when it was a private company, Dr. Wiron Yusuf owned 87% of that private company, and James Huang owned 13%, and they put in $30+ million. They still own that comparative percentage in the public company. So it's so it's about 20% is about the float of the total shares, or a little less, 15%, and 80% or so is owned by those two individuals in that proportion. So 80% of the public shares, everybody is all common shares. There's no special preferred shares. 80% of the common shares are owned 87% by one party and 13% by the other party.
And specifically, the question asks who Maverick is, and that's the Wu ownership, correct?
So yeah, I mean, this individual ownership, it might be through a company or something that they have. Look at our filings. I think they give the names of those enterprises that own that shares, but they are passed through right to those two individuals who then own 100% of that entity.
We've had a couple questions just on pricing, your expectations pricing. Maybe spend some time explaining what Indonesia pricing typically is compared to what's the best comparison.
Sure. Indonesia for oil is priced, think of it as Brent, the price of Brent, minus 5%. So it's a formula that they use, a independent, objective formula that they use based on oil prices. But it comes out to historically always about a 5% discount to Brent. And Brent is running now, I guess, 43, maybe WTI is about 40. So, it's we're getting a little higher than WTI, but about 5% less than Brent. So good oil price. In natural gas, right now it's about $7 a unit. And that's based on a supply demand in the country. They're importing LNG at about, the last I heard, the prices maybe have changed. It was about $12 to $14 a a unit, an MMBtu. And so, 7 is for an indigenous production is a nice discount versus that very expensive LNG coming in. So basically, $42 and change right now for the oil we're producing, and will be about $7 an MMBtu for our natural gas.
Great. And there's a question coming in here on how are your revenues denoted. You've kept talking about dollars, but talk a little bit about what the foreign exchange risk is. What are your revenues in dollars? Are your costs in dollars?
Sure. Actually, what's very, very positive about Indonesia is we actually get paid in US dollars at the price of Brent. I'm using Brent, but keep in mind it's about a 5% discount to that. We get paid in US dollars. That's how they pay. And so our costs locally are in Indonesia rupee, so we're paying costs in that currency, but we get paid in US dollars, which is a real advantage. And that's really based on a historical. You've got Chevron Texaco and the importance that they had there. Those were requirements. So we don't see much foreign exchange risk in this contract.
And then we have a question about the quality of the oil and does it need to go to refinery?
Yeah, so we sell it basically we've got storage tanks in our oil field. We sell it there. The quality is about 36 degrees API oil. So a nice sweet crude. So it's a very good high quality crude. So we're getting that max value on comparable to Brent. So a very good crude coming out of there.
Then we have a follow-up question on the ownership structure, and that's just asking, is it the owner's intent to reduce their position over time?
Yeah, certainly, yeah. They will reduce it, not because they're going to sell their shares, but it'll be reduced because as our capital needs increase. I mean, right now, we're not a company that is at risk or has any qualified opinion by the accountants. We could just sit back right now and just drill those 6 wells and stay as in never have a going concern in the company and continue on for a long period of time. But if we want to develop that other, the 1,000,000-acre big elephant natural gas field, 16 miles from Jakarta, that's going to require hundreds and hundreds and hundreds of millions of dollars. At that point in time, we'll have to look at what capital structure to use as we drill those wells in the beginning. We don't need that money right away, but if we want to drill several wells, we might need to go into the capital markets and either do some lending or issue some other equity in the future, and that will have the natural, effect of reducing the ownership of those parties. We want to get more shares out into the marketplace. We want to increase our liquidity. That's very important. That's something that I'm going to try to do, and that will naturally happen as we, balance our capital needs between equity and debt. And as I mentioned, we likely will bring in almost certainly a major international oil company for that 1,000,000-acre block, because again, is going to have such capital intense requirements that it's always good to have a partner. When I was at Texaco, we always brought in partners in every development that we had. Most of the time it was Chevron, because Chevron Texaco worked together, but that was a partnership then. And so that's what we plan to do for that, to help offset some of those hundreds of billions of dollars in capital needs.
So you've talked about potential partnerships in general. How do you see your role as a small company with local ties acting in an area that's dominated by major players?
Sure. I mean, it's the companies. I mean, when I was at Texaco, I did deals with small, especially if you're going into, when we went into places like Burma, now Myanmar, I put a deal together in there. We joined in with a small company, had an asset, we bought into that asset, took maybe 80% of it. We have the relationships with the government, but so do companies like Chevron and Shell and BP. They have the relationships with the Indonesian government. But they don't have better relationships than we do. So I think we complement them equally in the government relationships in the country of getting a venture like this approved. Because once we drill those few discovery wells, which I anticipate we will, in this big 1 million acre block, we then have to submit to the government an overall development program on how we're going to develop it. They need to approve that. And, we'll work with a partner at that point in time. But, I think our relationships with the government, we had the Secretary General of the whole country come and to ring the opening bell, and the Minister of Energy. So we had very good government relations. When I go to the country, we always meet with the Minister of Energy. His door is open for us. Again, first Indonesian company in any sector to do an IPO on the New York Stock Exchange, or by the way, NASDAQ. And so that heightens the importance of seeing us succeed. One of our private owners has 100% monopoly of the providing food products to the military and to the police in Indonesia and to the United Nations, and is the largest hybrid rice producer in a country of 260 plus million people. So, we have great experience in the country, and we're indigenous. I think that puts us in an advantaged position. And then you've got here in the United States, two individuals, myself and our CFO, that know how to run a public company. And so I think those things combined will be the best thing to drive value for our shareholders.
Along those lines, we had one question on nationalization. Do you want to just address that?
Sure. I don't know of nationalizations in the oil and gas industry. I'm sure people, and they have pointed it out, in the mining industry. So not mining for oil and gas, but mining for minerals. There have been some situations in the country where some companies have been nationalized, and that's taken place. However, energy is not as important to the government and its revenues as it once was. It once was about 25% of all the revenues of the country came from oil and gas. It's less than that now, but it's a very, very important sector. In that 50-year history, they haven't, they've been the model place to be. They've developed a very transparent, effective national oil company, accounting systems, legal systems, everything there. Contracts are in English, the regulations are in English. This is an important industry. They haven't done nationalizations in the international oil and gas industry. So, we feel that the risk there is de minimis.
We do have a question from a listener who says, what's been the most frequent feedback you've gotten from external shareholders, and what are your thoughts on that feedback?
Sure. Probably the feedback would be, liquidity in the stock. We don't have a lot of shares traded, so getting in and out creates some, bit of a challenge. So that's probably been the most, negative. Some people ask questions like, Indonesia, are we safe in Indonesia? Sort of like the last question, are you safe in Indonesia? Is our investments there at risk? And what I try to do is, that's probably the most common question, is tell exactly the answer I gave before. It's been operating for over 100 years with the international energy industry, but really the last 50 years has been the core. And, a company like Chevron is still there, and it's there for 50 years and has produced 12 billion barrels of oil. And they're just one. You've got lots of other companies from Exxon and Shell and others that have operations there. And, the political environment has welcomed us there. And so that political risk is small. We're not China. We're Indonesia, friendly relationships with the government here. They've had the re-election of the president there. So that's probably the biggest question people will have, is political risk and industry risk, but it doesn't exist. The biggest risk we have is price of oil and gas. So that's another point. So people said, oh, you're shutting in your production, you stop drilling. That's why we needed to get our press releases saying, no, it's business as usual. We're going to drive production costs to below $20 a barrel, much different than here in the United States, where shale has forced companies to shut in production, not drill anymore. We're not in that situation. So that's the other biggest question, is how low can oil prices go and you still be profitable? Well, we can go below $30 a barrel and be profitable. And we're not there now. We're at 43. And so my expectation is, as the economies in the world are opening up, that you won't see really a drop in oil and gas prices, but who knows? Nobody knows, but we're best positioned to meet those challenges and return shareholder value with those challenges.
You've talked a lot about the Crew Block and the 6 wells starting in September, but we haven't talked that much about the Ciderum, except to just say it's a potential large play that would require, would you say, hundreds of millions of dollars and need to bring in major players. Can you give any details in terms of when or how much you'll start drilling when you do drill?
Sure. So our intent is in 2021, next year, we'll drill about, our intent is to drill 2 wells. We're doing 3D seismic. By the way, in our Crew Block, we're also doing 3D seismic starting in, I think, October of this year, so in a few months. But in the Ciderum Block, we will be doing the end of this year, going into next year, we'll be doing some seismic work, and we'll drill, our intent right now, program is to drill 2 wells. And we're going to drill those wells, by the way, parallel to the 4 discoveries. So there was a company, a Canadian company called Pan Orient, and they held this block for several years. They drilled 4 discovery natural gas wells, but they spent $40 million overall in the block doing seismic and drilling wells. They had to withdraw because they ran out of money. This was in the past economic oil and gas crisis in 2014 or so, when oil prices collapsed. They came near bankruptcy. They had to withdraw. They didn't have the cash to continue on there. They withdrew from that block. And so, but they drilled 4 wells. So what we're going to do is sort of a no-brainer, is to go to the 2 best sites of those 4 and drill a parallel well on each of those. That'll cost about $6 million a well. We're going to drill it in such a way that we can have some early natural gas production. We're not going to just drill it and cap it up. So we're going to apply for the rights to do early production. So, we might have some small production starting in 2021, certainly in 2022, as we drill a few more wells. But then what happens is we prepare and submit this overall development program, which then will include the hundreds of millions of dollars to spend. The government will probably take several months to approve that, and then the big money starts going in. But, our early plans are seismic starting later this year or beginning of 2021, 2 wells in 2021, each about $6+ million each. These are much more expensive wells, deeper wells, and then develop that parallel to the cash flow and the cash cow coming from the Crew Block on Sumatra.
We have a listener who asks, do you have any plans to hedge your production?
We will. Right now at 250 barrels a day, it doesn't really make sense. But, we'll be up to over, in 6 months from that first well, we should be over 1,200 barrels a day if we're lucky, maybe even more. And so I think at that point in time, we will do some hedging. So our intent is to do that. Right now, we are not.
Okay, we're down to the last couple minutes, so I'll give you a softball question and just give you a second to tell us why you think Indonesia Energy is a good investment at this point in time.
Sure. India's, I've been 41 years here. I've seen oil and gas prices go up, go down, go up, go down. I've never seen them go down and not go back up again. But what's always important is low cost. And if you can be the low-cost producer, that means more shareholder value, and you can weather any of those risks and challenges. So that's what we are. We're going to drive that cost of production below $20 a barrel. And the reason we're a good investment is we're going to take our production and quadruple it from 250 to 1,200 barrels a day after 6 wells. We are getting, with a production cost of below 20, we're hoping it'll be below 20 at that point in time. And if oil gas prices just stay where they are, those wells are enormous returns, will kick off a lot of cash flow to the company, making us cash flow positive. And then we're sitting there. So very different than all these energy companies in the United States and microcap companies. We're unique in that regard, low cost, and we'll be profitable. And then we've got this big, huge elephant Kahuna field in the island of Java, 16 miles, 1 million acres, 70 times Manhattan from the city of Jakarta, with industry and demand for natural gas growing dramatically and exponentially. So that's why we're in good investment. We're going to deliver. We're going to stay focused, and we're going to deliver on what we promised to our investors. Important to stay focused.
Terrific. Well, we said we'd do 45 minutes, and I think that's about all the time we have today. But thank you, Frank Ingriselli, for helping us get a better understanding of Indonesia energy. If you'd like to get the research I've written on INDO, please go to channelchek.com and type in the ticker in the search box in the top left. Check the channel section. Thank you for attending. Watch for more virtual roadshows coming soon on Channelchek. Goodbye for today.
Great. Thank you very much, Michael. Thank you, and thank you, everybody, and thank you for your confidence in our company. Thanks.